My name is Alex McAloon. I'm the founder and CEO of American Capital Group. We started the company 12 years ago with the focus of empowering entrepreneurs, mainly through financial products, different financing options that they're not always aware of, that if they go out and hunt themselves, they most likely would not find. And just making sure that they're informed and educated on the products that are there for them so they can continue to grow and thrive in their business. Before I started American Capital Group, I was in commercial real estate. So I've been in finance for close to 15 years now. That was fulfilling. I mean, certainly, being a part of building buildings is a great thing, but I always kind of wanted something more connected with the real business owners. And 12 years ago, got a great opportunity to start the company, and it's been amazing ever since. And we've helped over 3,000 small businesses secure financing. So my inspiration to work with small business owners is really from, I guess, my upbringing. Both my parents worked for themselves; they had their own business. As I worked in corporate America, I realized that I wanted the hard work that I do to really benefit me, and I wanted to support people out there who are looking to push and have that same vision. So always working with the small business owner and the decision maker at the end of the day is it's rewarding on top of obviously just getting a loan funded.
What is an SBA loan?
The SBA is a government administration that has the express intent to support lending to small businesses. What the SBA does is they put out, let's say, a 100-point document that says if you meet 60 of these points, we will backstop the loan, essentially. So they put out this big document, and all the banks that are interested in doing these loans take those 100 points, pick the 60, 70, whichever they may think are most important and valuable to them, and then they start to process the loans.
Okay, so that's what the SBA is. What is an SBA loan?
So an SBA loan is a loan that typically has anywhere from 10 years to 25 years. These are directed solely towards small businesses. They have a broad range of what a small business is. It's anywhere up to $50 million. The vast majority of those loans are made to businesses doing less than 20 million. And all of these are going to be 10-year or 25-year term, which are used to either expand a business, purchase a new business, purchase real estate for the business, or to purchase collateral or working capital. An SBA loan can be used for acquiring a new business, expanding your current business, working capital. It can be used for payroll. It can be used to purchase real estate or equipment. There's really a vast number of uses. However, it always has to focus on going back into the business. So you really want to make sure that when you're securing an SBA loan, that you have specific reasons within the business.
So you mentioned expanding a business and acquiring a business, but I didn't hear you say starting a new business. So, for example, can someone who works for Equinox as a personal trainer for 10 years, wants to start his own gym, are they eligible for a loan for a new business?
So the SBA will do startups. It definitely looks to people who have experience in that business. The SBA loves to support franchises. So an individual who does not have any locations and is looking to start their first location is a good candidate for that. The big thing is that you can't go from completely having no experience in the industry and then jump into it. But if you do have a background, say running a gym, and then you're looking to open your own gym, you're definitely a good candidate.
How is an SBA loan different from a non-SBA loan?
So an SBA loan is going to be similar to another term loan or line of credit, which you can apply for at your local bank. The biggest difference is that if the bank underwrites you for a loan and they have some questions or concerns, they may put you with the SBA programs. The SBA programs are going to have typically a little bit more paperwork, but that's to make up for some other kind of shortfall that the borrower may have, whether that be cash flow or credit issue or some other let's say liquidity, that they're starting the business and don't have quite as much capital. So the SBA would be looking to do those types of financing. When you apply with the bank is going to do a risk assessment. So they're going to look specifically at your personal credit. They're going to look at the business history, if there is one, assuming it's not a startup. They're going to look at the liquidity that you have, meaning the amount of cash that you're keeping on hand at any given time. And they're going to look at the profitability of the business that you've been operating and looking to borrow against. So typically, especially in this environment, banks are 700 plus FICO as a hard cutoff. The SBA will go a little bit underneath that, so that opens up that group of applicants for an SBA loan. Certainly, the amount of liquidity, meaning the amount of cash that the business owner will have on hand, whether they're starting a new business or doing an expansion, is a lot less when it comes to applying with the SBA. Also, startups are, again, supported by the SBA much more aggressively than your bank is going to want to do a startup. Banks love low risk. Banks love to know that the borrower who doesn't need the money is the type of person that they want to lend to. And the SBA is a little bit more liberal in how they're looking at the borrowers, because the goal is to support the small business by the government.
What are the criteria that will improve the odds for a borrower to obtain a loan?
Within the SBA or just
SBA? SBA.
Soft numbers to always keep in mind is 700 plus credit, assuming you're not doing a startup, 2 years in business. There are some SBA programs which do not mandate profit on the tax return. However, it's always a good idea, if you're interested in getting credit, to show as much profit as possible, because that is how the bank is ultimately going to assess whether the business can support the new loan.
But what about companies that use the loan to grow the business, so they're minimally profitable now, but the expected future profits will be enough for them to service the debt? How does the SBA think about loan proceeds driving revenue that then enables the borrower to pay off the debt?
So the SBA is definitely looking at how the money is going to be used. There's kind of different tiers. So under $150,000 loan, the need for profit on the tax return is sometimes completely waived, assuming the borrower has strong personal credit, 700 plus credit, and 2 years in business. If they're looking to take more than $500,000, the business is going to need to what we call debt service, meaning their profit on the tax return is going to have to support whatever those new payments would be towards the SBA. So under 150 in a loan, you have a lot more options, a lot more flexibility. Up to between 150 and 500,000, you're going to be on the cusp of being profitable or very close. And then over 500,000 is a full assessment that the business as it stands can support that loan. The one caveat is if you're doing a startup, it's obviously going to be based upon your projections of the business. However, in that case, the way that they're going to make up for the fact that you don't have any profit, any revenue at that point, is the borrower. So meaning how much liquidity, how much cash does the borrower have on hand? How much cash is the borrower putting into the build out of the gym or the starting of the business? And they take those things into account so that if projections don't go quite as smoothly as we would all like, there's a way for the loan to be paid regardless.
What's the actual relationship between the SBA and the bank lender?
So the SBA is not a direct lender. Many small businesses had their first interaction with the SBA for PPP loan, which was one of the COVID programs, and another program called the EIDL. In that situation, the SBA was a direct lender. Any loan that a business is going to currently apply for is not given by the SBA. It is backstopped by the SBA. So what does that mean? The SBA essentially tells the banks what they will, the SBA tells the bank what criteria is needed on the paperwork so that they will backstop. So the bank is the lender and you will make payments to the bank. But the bank then has the, basically the bank then has the support of the SBA so that in case there are issues with payment, the SBA basically backstops that loan. The SBA will guarantee the loan between 75 and 100% for the bank. So if there are any problems with the borrower paying, the bank is still made whole and they get their payments from the SBA. The reason that the SBA is willing to do this is, again, to support small business lending to borrowers which the bank may not be 100% confident to lend to. The SBA makes it possible for banks to lend to riskier borrowers than they would normally be comfortable with because of the guarantee from the SBA.
What are the advantages and disadvantages of an SBA loan versus a non-SBA loan?
The advantages of taking an SBA loan is that you will have a higher likelihood of approval. The bank may choose to decline a loan based on some of their underwriting criteria. And with the guarantee from the SBA, the bank would be willing to provide the financing. The big disadvantages of the SBA programs, there is typically more paperwork that's needed so that the government will provide the guarantee. And typically rates are going to be a little bit higher than going with the conventional bank product. I always want to make sure that borrowers understand it's not you choose I want an SBA loan or I choose I want a bank loan. Typically, the borrower's paperwork and the borrower's history will dictate where the program is, which is going to give them the highest likelihood of approval. So up to 150,000, you'll need 2 years of business tax returns. Over 150 to 500,000, you'll need 3 years of business tax returns. And then over 500,000, you'll need additional financial paperwork. Specifically, the SBA is going to make sure that there's enough collateral for a loan over 500,000. They're going to put a lien on your home. They're going to put a lien on any business or other collateral that you might have. They put a lien on accounts receivable. So the higher the dollar amount, the more paperwork and the more security the SBA is going to make the bank take. So the SBA is going to put a lien on your home and any loans over $500,000. The difference is that you don't have to actually have the equity in the home to support the loan. So if you were to go get a mortgage or a home equity line of credit, the bank who is going to do that loan is going to make sure that your mortgage is only 60% of the value of your house. The SBA does put the lien on your home. However, if you just bought the house 6 months ago, and you have no built-in equity, it's not going to prevent the SBA from doing the loan. So the SBA does require a personal guarantee. Essentially, any loan that you're going to walk into a bank and try to get is going to be personally guaranteed by the owners of the business. Anyone over 20% ownership will typically have to personally guarantee the loan. There are some programs which don't require a personal guarantee. However, typically those are either going to be more expensive or much larger dollar amounts. The timeline to secure an SBA loan really depends on the dollar amount. So loans up to 150,000 are typically processed in 2 to 3 weeks from the point of the full package being received. The loans from 150 to 500,000 are going to be closer to probably 4 to 8 weeks. And then a loan over 500,000, which typically is secured by real estate or other collateral, can take much longer, realistically 2 to 4 months for those programs to go through.
So what are the disadvantages of an SBA loan?
The major issues with an SBA loan is typically timeline, paperwork, and they will be more expensive than a bank loan that is not guaranteed by the SBA and done directly by the bank. It's very important to keep in mind that an individual will typically be declined for the bank loan and then go take SBA financing if you were to apply directly at your local bank. At the end of the day, the value of the SBA is that you will get the approval. I mean, one of the biggest hurdles for any small business is securing capital. So there are challenges to doing that, certainly, which is why our main focus here is speed and ease. And we make these programs as easy as possible, right? Nothing is, we can't get rid of all of the requirements, but we do hold people's hands through the entire process, talk them through how to fill out the paperwork, talk them through, a lot of the time what the paperwork is going to have to say if today is not the right time to apply. So we really do support them through all that.
Assuming we're talking to not a startup, someone who already has an existing business and they're using it for expansion, working capital, acquiring a new business, something along those lines, what are the other types of financing that they might consider while they're also considering an SBA loan? Are there any other types of financing for an existing business owner, 2 years plus experience, who's in growth mode?
There are many programs and products for an existing small business to secure financing. At American Capital, we really have kind of 2 buckets. There's immediate financing, and then there's SBA or term loan or line of credit products. So the immediate financing is heavily driven by the borrower's credit and by the revenue. So it is not driven by profit. So if you are running a small business or you're running a gym, that revenue has been increasing rapidly, and you're reinvesting in the business and not showing profits, those programs may make a lot of sense for you. The other value of those programs is that you can get financing in under a week, which certainly is valuable depending on the use of funds and what the rest of the paperwork is showing. Another product that is great for existing businesses who are in growth mode is a line of credit. The use of funds is not specified to expansion, to taking on a new lease, to taking a new location. The borrower really has the flexibility to use the capital as needed. Those programs are great if you are expanding or if you're a slightly seasonal business. Obviously, a lot of boutique gyms may have lulls throughout the year and really ramp up in January. So those programs are great. Typically, it's going to take anywhere from 2 to 4 weeks for those programs to be approved, the borrower does need to have strong personal credit as one of the main criteria there of 700. And from a tax return perspective, they do not have to show a profit, but if you're looking for more than 100,000 on the line of credit, you will have to be showing it on the tax return. The lenders are going to look at typically an Experian personal FICO score. The thing I always say to our clients is that your Credit Karma FICO score is higher than the report that the bank is going to use. Experian provides a lot of different products, which they're all different credit products, but they have one specific for small business owners that's called version 8. And unfortunately, if you use Credit Karma or you use, on your Chase account or whatever it is, your FICO is probably 20 points lower than what is showing there, according to the bank. At American Capital Group, we focus on small businesses across the country. We are located in New York. And really do focus on the Eastern Seaboard. Our clients are anywhere from 250,000 in annual revenue up to 20 million. So we really are interested in the true small businesses of the country. We focus and really pride ourselves on making the process as easy and fast as possible. Some programs will take a couple days to finalize. Some programs may take 4 weeks or 8 weeks to finalize. But always throughout that process, our focus is making sure that our clients and borrowers are supported. We guide them through the entire process, explain to them what the options are going to be, and make sure that they're able to keep running their business. Because at the end of the day, the loan is a support mechanism for the business. The loan is not your day-to-day as a business owner. And we make that process as easy as possible. So American Capital Group has a network of over 30 lenders that we partner with. It's our job to communicate with our clients, the borrowers, understand exactly why they need capital, what their situation is, and then package up their file in the best possible light so that they can have the most options, and whether it be the lowest cost or the highest funding amount, whatever's really their big criteria, we'll put our efforts towards to make sure that they have those options available. So American Capital Group is a loan broker. We have, again, relationships with over 30 lenders. Each lender has their own criteria, and we listen to our borrowers and understand what their focus is and what their need is, and we partner them with the right lenders. We do an initial assessment of every client. Once the client has decided to move forward with an SBA loan, we'll gather up 2 years of business tax returns and do a full review. If we believe the client is going to be approved, the next step is what we call the packaging process. At that point, we do take a $2,500 deposit. Once we put together the total loan, typically takes, again, another 2 to 4 weeks to finalize. And at that point, we may charge another 1 or 2%. So we do a free assessment with every client. We gather up the 2 years of the business tax returns and do a full review. At that point, if we feel that the client is going to be approved with an SBA program, we will charge a $2,500 packaging fee, which is non-refundable. But our focus is not on these fees. It's on making sure that the borrower is motivated to get to the finish line. At the finish line, there is a 1 to 2% processing fee for the loan amount. So at American Capital Group, our main focus is guiding our clients through the loan process. With the network of 30 lenders, it allows us to really place our clients in the right right program. At the end of the day, we understand small businesses are run by the people we're dealing with. So by doing hand holding, by doing concierge service, making sure that our clients are able to put the least amount of effort into getting the financing, and the most amount of effort into growing their business, we add value by supporting them through that entire process. Our first and foremost goal is empowering local entrepreneurs. It's a real passion to support true business owners. We take that with a lot of pride, and it's a heavy burden sometimes, especially depending on what the situation is. Speed and ease aren't the number one and two focuses. I'm an avid fitness enthusiast. I think it's an amazing way to impact the community around you. All of the BFS community is doing that great work, and we look forward here to supporting the growth of the community. So in addition to the SBA programs, we do have immediate funding programs, which are heavily driven by revenue. There's programs that can be funded in a couple days, up to a week, which are going to be a little bit more expensive. But at the end of the day, the certainty of getting the capital is very valuable to certain clients. The other big program that we do a lot of is the line of credit. The line of credit it offers the flexibility to the business owner who may not need access to capital today, but knows that they have a seasonality, or knows that they're going to be expanding in the next 6 to 12 months. And they just want to have that comfort to know that business can continue to grow, and they don't have to start to penny pinch as they're expanding. We, as part of our network of over 30 lenders, we can put our clients into the right product for them. So a lot of the time a client will say, I'm looking to do expansion, and they don't quite have all the details laid out. So we start to work on the SBA program, which again may take 1 to 2 months. And in the meantime, they decide that, you know what, I want to do a marketing push, and I want to get some pop going today. And then we'll be able to get them into one of the faster funding programs, so that they can have the boost today and then still build for the future.